people that after one good trade, they're a different person. Okay? Certainly after three winning trades, they're in the bar buying drinks and the souls have never bought a round in their life. What happens is that after a series of winning trades, we become euphoric. And if you look in the Oxford Dictionary, the definition of euphoria is invincible. So what happens is that you say, sod all that position sizing, let's have a big bet. And risk managers in the City of London are actually taught these days by the FCA to, in fact, that's the equivalent of the FSB here, to actually look at the traders under their control and assess their susceptibility to euphoria. Now, you're going to find that once you get the 1 or 2% into your head, it's in fact not the runs of bad trades that cause you to go broke, it's the run of good trades, because in a run of good trades, you actually trade far, far too big. So just be careful about euphoria.
January 23rd, 2026. Let's see how many times this strategy came into effect today. We're going to look at an altered version of the strategy. Instead of using the 2-minute data, we're going to use the 1-minute data. And we're going to keep the strategy the same, and we're going to see what happens as a consequence of switching from the 2-minute to the 1-minute. So right here at market open, the first part of the strategy says we need to wait specifically for the first hour and a half to 2 hours of the market. We want to wait for the 5-minute extended hours and the 5-minute regular hours to become in harmony, in sync. We want them to be showing the same data. So look here at the first open of the market, the first minute of the market. What do you see? The 5-minute extended is going up. The 5-minute regular is going down. That's not in sync. We want to wait for them to become in sync. And when does that happen? Nope, still going down, still going up. Building more upward pressure, still hasn't flipped over to the upside. Okay, this is getting close to flipping to the upside. This one is now building upward pressure. They are now in sync. And what do you see? Right here on this next bar, we get a volume confluence, a volume bar greater than the previous 3. We're on the right side of the momentum on the MACD. The 5-minute extended is giving us permission to take trades to the upside, and the 5-minute regular is about to give us permission. It hasn't really done it yet. We're still considered early. So this would be an early entry. Your entry would be at the close of the candle, right when the candle closes, for a long position, obviously, going up, going up, going up. So the stop loss would be slightly below the entry candle, or sometimes at the previous candle. Your stop loss would be around here. Your entry would be at the close of the candle. You would target a 2-to-1 for your first profit target, and that would be a win. So that was a win right there. Now look what happens right here. We get another volume confluence. We're on the right side of the momentum. The 5-minute data is giving us permission to take long trades still. We're not early now. We're kind of in the perfect timing now. This is not necessarily early. So you would enter right here at the close of the candle. Now look at this next candle. This next candle whipsaws down and would have likely hit the stop loss. So this would have been a small loss. Very unfortunate because this continued to run. But that's what happens. So 1 loss, 1 win so far. Now we move forward. Look what happens right here. We get another volume confluence, volume bar greater than the previous 3. The 5-minute data is giving us permission to take trades to the long side. We enter the trade right here at the close of the candle, stop loss slightly below that candle, or aligned with the previous candle. And then we target a 2-to-1. This one got the win, but it didn't get a regular win. This kept going forever. Look at this. It just kept going forever. This got huge, huge profit potential. So that's 2 wins, 1 loss so far. Now, the 5-minute MACD continues to unfold with strong upside. It has a little sell-off right here. You can see it tapering down, tick down right here. Same as this. They're both sort of becoming in sync. That happens around the 2-hour mark. Both of the 5-minute data almost always sync up at 2 hours in. But now this starts building momentum back up to the upside. Look, we have a tick down, boom, we pop back up. Okay? At that very moment, which is where we are right here, as soon as we start ticking back up to the upside, that is when we have opportunities to take long trades again. Look at these volume confluences that are occurring on the right side of the momentum. So had you taken the early situation where this hasn't really finished yet, this is a risky setup. You get a volume confluence on the right side of the momentum, another huge win. And then had you wanted to wait for the confirmation, if you want to wait for these 5-minute MACD histogram bars to print and to actually finalize, you would be a little bit past right here. Okay, now they have finalized. Now we've got the confirmation, as people say. So now we don't have a confluence in the volume yet until right here. Look what happens right here. Right here, we get a volume confluence, and we've finally started to make our way back up on the MACD histogram, displaying momentum. So this would have been a great win as well. So far, a lot of wins, only one loss. And the wins are huge, and the loss is small and contained. So the reason I'm showing you this strategy is this continues throughout the whole day. And this continues every day on large volume, high action ticker symbols like Palantir, Amazon, Nvidia, Tesla, Apple. We're going to look at the downside now. Does this work going to the downside? You might be wondering. Well, let's see. So the MACD of the 5-minute twins is now tapering. And now listen, as I said earlier, when you get about 1.5 to 2 hours into the market, the 5-minute data sets become aligned, so you don't need to look at both of them anymore. You can just look at one. So I'm going to collapse this one. We're going to look at just the 5-minute regular hours, which tends to show more important validated information. The 5-minute extended hours tends to not be as important as the 5-minute regular, but there's variances and there's nuances there, so you need to keep that in mind. But normally the 5-minute regular hours is where we want to be focusing. So right here, we're about to cross over to the downside, getting permission for short trades, okay? We're at the tick before. We've been selling off. We're really close to that middle line. I consider that valid territory. If we were up here, that's non-valid territory. But if we get really close to crossing over to the downside, I consider that valid short territory, even though it might be higher risk. What do you see right here? We get a volume confluence. Volume bar greater than the previous three. Our momentum is now aligned to the downside. So this is another great win. You enter right here at the close of the candle. Put your stop loss slightly above that candle. Target a 2-to-1. That hits the win. And then you get more and more profits down here. That's great. And all of these white lines were further situations where this strategy would have come into effect for wins. There was a lot of wins that occurred today. But look at this big one. Look at this. Why do I say big? Well, look at the movement, the profit that it would have given you. Why was this a valid trade? What do you see on the 5-minute MACD? The 5-minute MACD is holding constant. It's not tapering upward. It's not losing momentum. It's holding momentum. Okay? That's given us permission to take trades to the downside. Short opportunities. What do you see right here? The momentum ticks down right here. We're losing momentum right here. We're losing. It's very weak and vague and ambiguous. But right here, we get a tick down and we get a volume bar greater than the previous three. This was the entry right here for this massive, massive win. I'm not going to bore you and go over the rest. In fact, I'm going to end the episode right here and right now. And I'm going to end this episode with a message. Today is January 24th. I'm making this video for the trading day of January 23rd, yesterday, which was a Friday. I just had 2 consecutive profitable weeks in a row. Let me say that one more time. I've been trading consistently every market day for the past year. I started in January 1st, 2025. It's January 24th of 2026. I have been trading every single market day for the past year. I just hit my 1,000th day trade. I have been using the 2-minute chart to trade this strategy. There's nothing wrong with the 2-minute chart, but recently I realized that if I were to use the 1-minute chart, I would get tighter entries and I would be maintaining the same amount of risk. In trading terms, that means optimization. The next week of my life, if God gives me another week of life, I'm not going to waste it. This next week of my life, I'm going to trade like I have never traded before. I'm going to let this strategy work. I'm going to follow the advice of the greats and let losers be losers, and I'm not going to let them bother me. I'm going to act on every single signal that occurs within me that follows these rules. I'm going to trade better than I've ever traded next week. And I look forward to reporting to you what happened to me. I'll see you in the next one.